Welcome to Trading Lounge and the Australian Report for Tuesday, September 7th. Just to let you know, the US have got a holiday today, so we're going to see lower volumes sort of across the board. With the ASX here, I still don't know what we've got here in terms of having wave 3 here, which if that was the case, that would be earlier than the US markets. But I have seen the Australian dollar lead the S&P before as well. So even though this is not the Australian dollar, but yeah, so it's possible. The other point here is that this move down through here as an impulse wave, that kind of haunts me, because I know that after a correction that we can also have another 5 down. So it's still possible that we can look at like wave A here, probably 1 degree smaller, and a B wave over here, and a C wave moving further down in this. So yeah, any upside here we just really need to be careful of. And any upside here with ANZ, it appears that we can go, continue going higher, but with CBA it's a little bit trickier than that. And we know that the resources are still weak. They've still got a bit further to go down. So just coming back to the intraday for the 4-hour chart here, there was obviously different ways to look at it, as I've been pointing out during the week. I don't know if we've got wave 3 here or we've got wave 3 moving up here further. There's different ways to look at wave 4 here. Even if this is wave 4, I mean, the European markets are the same actually, and the DAX is actually going through a triangle pattern here. The FTSE is a bit messy, but it's been messy since the EU situation, and the stock 50 is travelling quite nicely though. So I don't know if we've got 1 and 2 and 3 and 4 to here or 4 to here for this. I still don't know, and any push to the upside here is also a little bit dangerous as well in terms of going long at. So that from that high to that low there, we're still really trading under the 50-60% retracement level for this market as well. So if we had the 61.8%, or say the 7,550 as the support, then I would be more inclined to see it to the upside. But it's possible to look at this, as I just mentioned, as an A wave here, a B wave over here, just sort of a little bit complicated in here, and you can label it in different ways, certainly a triangle pattern. So it's possible that this can, pull down at this stage. It just really depends on the banks, If we just keep drilling in here just for a moment. Yeah, I mean, as I mentioned, look, I just sort of move into the guessing game because, I can look at all of this here as an A wave to here, B wave to here, a C, D, and E here. I can even look at this move here as, well, as an A wave to here, a B, a C, a D, and an E wave here for the wave 4 here. So there's lots of different, as a wave B here, rather. So an A wave here, a B wave here as a triangle, and a C wave up here. It is becoming quite interesting here though, because we can see, if we go to the tick chart, we can see it as an impulse wave rather than a corrective wave. So very clear as 1 and 2 and 3 here and 4 here, and then looking at this here as wave 1 and 2 here and 3 and 4 here, and then looking at this as 5 to the upside. So it looks like it's sort of gone past it. I'll put wave 5 here just in case we need to look at this as 1, 2, 3, 4 here, and then 5 to the upside here. So it's at the 61.8%, and I just don't think that I can call it in bullish unless we have this number here, the 7,550 as support. And for that support, of course, we would need the classic trading levels pattern, the arrival, the reaction in 3 waves, just first high above the level, and then the ABC pattern at that point, and then up. At that point here, right there, then we could call it bullish. And of course that's this pattern here, the arrival that we've just got. We're having the reaction now. We still need this, this, and this, and this. So yeah, I mean, like I mentioned, the US are on holidays, well, Labor Day, but volumes have been low since Friday on all of that, and will continue to be lower and are being sold off right now. The S&P's being sold off right now because people want to go on holidays as such. The futures market will just continue, of course, but so it really depends on the banks. And today I'll just start with ANZ as the positive side for the market to move up. Now, when I look across the top here, this is the high, right? And this move is corrective. So this being corrective, obviously corrective in 3 waves and not 5 waves, then we'd take out that high there. So we could put blue wave 4 here and blue wave 5 here for that, and call that in as a top. It's possible. Yeah, but it was rather early for that to come into play compared to CBA. So, I mean, I think it counts quite nicely as a triangle, because every time I count this leg, that leg, that leg, that leg, and that leg, they're all in 3 waves. I don't see any 5-wave structures heading to the downside at this point. So there's a really good case here for this to be a triangle pattern and move up for that final high from wave 4 to wave 5. As I've mentioned, going along above the top here would be the way forward on that, because we've got an impulse wave here. The corrective wave dropped lower, but it's still corrective. We still don't have 5 waves down through here, but we have to be careful we don't get an A wave, a B wave, and a C wave here and move down. So on this top here, perhaps just wait for it to have a bit of a classic trading levels pattern on that top rather than just buying the top. You know what I mean? At that point. So with CBA, I really don't know. So just recapping here, there's a good case for a triangle pattern for wave 3, 4, and 5, but we need evidence of that, and a move sort of up through here, or a stronger impulse wave. This here is 1 and 2 and 3 and 4 and 5. That would do it, and then we'd have a 3-wave correction after that. So that would do it. With CBA, there's it's just difficult. I mean, I can call this in as wave 3 over here, and then an A wave, a B wave, and a C wave down here as sort of a 1 and 2 and a 3 and a 4 and a 5 in here. It doesn't finish off very well. But even any long trade here could fail at 105, which is the 50-60% mark. So I don't know if it will go to that point and fail or just continue on at that point. I would need to see an impulse wave on ANZ, and also something a little bit more positive on the banking sector and the finance sector. I won't look at those today, but so I still don't know, and this is what's partly causing problems for the ASX as well. So I still can't resolve that. So we're going to move on to the resource sector. And, just before we do, we normally have a look at China here, just on the A50. We've probably got a low in for the A50. We know the Shanghai comp is pushing up, so we know that China on that front, because the A50, all those high-tech stocks are, you know the story there, for better or worse, for country or Xi Jinping, country or king. And India is pushing up nicely. Still further to go, but I'd have to say coming into 17,500, there's going to be a resistance there, and that's where you're going to get that smaller wave 4. So if we count this as 1 and 2 and 3 and 4 here, anywhere from 17,300 to 17,500 are minor levels, and 5 being the second strongest number. It's certainly going to peg it down a little bit. So we're expecting a correction in this area here somewhere, but we're not going to let that phase us. We're just going to keep the stop out of the way and get through that and move up higher. So we're looking at this as 1 and 2 and all the way up for 3, 4 and 5. So still further to go up. 18,000 is the target. 8's the third strongest number, so it's also, we always call 8 a profit taking number. So we'll certainly see, we're highly likely to see a reasonable size correction at that point. Now on to iron ore. So on the daily chart here, as you may know, we've been looking from from the top here as an A wave here. And I have to just remind folks too that this does not count in 5 waves, it counts in 3 waves. So it makes whatever this is corrective. Sure, it could get bigger, we could drop the A wave down to here and then the B wave up to here and the C wave over here, so it could get bigger, but my point is that we will see higher iron ore prices again based on this here. Obviously, you know what's going on. I'm not really the fundamental person, but you know that certain steel mines are being closed down and allocations are being pushed in different places to ease the demand, which is obviously working. So China's got to be happy about this. At what point will they buy again? Well, I was thinking 700. This iron ore chart is from the Chinese market, so it's just got more volume in it. In terms of counting this, of course, we were looking at 1 and 2 and 3 and 4 and 5 here. So we need to understand those 5 waves moving down through here. I don't know if we were looking on the tick chart for that, were we? Or yes, no, yes, no, yes. Let's just bring in some more data. Okay, so blue wave 3, blue wave 4. All of that's all good. We're looking down at 1 and 2 here and looking all the way down here for 3, 4, and now we're looking at this as 5 here. In terms of 5, we're looking at this as 1 and 2 here, and then 1 and 2 and 3, the third wave here, the fourth wave and the fifth wave. So all of this is the fourth. It may kick up a bit further back to the wave 4 of 1 lesser degree here. I'm not really sure about that. I haven't really pulled that apart too much, but we should be seeing the market move down to the 700, so looking for the low at that point. Anything below that opens up another can of worms for the downside, so we'll just see how that plays in and settles out at that point. So hopefully we got that low coming, because we're looking for lows for our resources as well, as you may know, which we'll look at very shortly. But coming down here further, so the gold market, we can see that there's a lot going on here. We can see these spikes in the market, and I don't particularly like using spikes as part of the count, but we're looking for wave 3, 4 and 5, so we could use that there, a bit of a long shot, and then looking at this as wave 4 and then looking for another move back up there. But I have to say all of this count here is very unclear, and we don't really have a good trade set up for the long trade that we're looking for yet with all of this. We're still working 2 options, but still, if I put wave 4 over here, which is also a little bit valid, but I just don't like the way that's finished off in 3 waves, so that's why I haven't done that. That's why I don't think the top, if I put wave 4 there, then we'd have to put wave 5 top in there for that. This wave 5 here, then that top would be in play. But I don't think that's the case. I think this is better suited over here. And as ugly as this is, as 1 and 2 here and 3 here and 4 here, I still think there's probable cause for one more move to the upside, but I wouldn't get too excited about that, because I think it's going to be short-lived. It's going to be pushed back down. We can see that there's pressure up at this particular point here for all of this. But there is hope when I do look at the silver market. The silver market wave count for change is really quite nice and clean. So we've been through this wave 4 to wave 5 over here. There is a case for wave 5 to be sitting over here, but that doesn't really bother us at the moment, because we're looking at this structure here. And as I mentioned before, we've got 1 and 2 and 1 and 2 and 1 and 2, and then we're going into the third wave. So we'd expect the third wave to be powerful, and yes, we've got that, which is great. So what I haven't really pulled apart is all this in here, but I think it's probably a good idea to assume, which makes an ass out of me and you, as you know. So that wave 3 could go here or it could go over here. Let's just be conservative and put it here for the time being, okay? And we'll put that in here so we can look at a 38.2% retracement level for this. So it's possible for this to pull down to this level here for this. But none of that really sort of concerns me that much. We can get rid of that. Because looking at this structure here, I can see that it's not finished. I mean, maybe we could look at it as the A wave to here, the B wave to here, then 1, 2, 3, and 4. And then up for 5. Yeah, but it just doesn't fit very well. You know, I'm forcing the count. So I think that we're okay here. I think that silver could be a bit of a leading light for gold, but we'll definitely see some sort of pattern, you know, across the 25 here. But what we'd like to see here eventually is the 25, which is the medium level, as support. And that would be our next long trade at that point. Of course, the stop for this can go just under this current situation here, so keep the stop nice and tight, because wave 4 shouldn't overlap wave 1. If there is, there's a problem at that point. So silver looking good further to the upside, so you'd think gold would sort of go along with it, but it's really struggling there. And we know that the gold market has, you know, 9 times the paper money in there than physical. I mean, it's criminal to do that, you know. It's just like when the US, you know, in the early days when Nixon took you know, they printed more money than they had gold, and it was only the Europeans that pointed it out to them, you know, so then they dislodged it at that point. So the US dollar is 50 years old on August the 15th now. So current, you know, so that's how long the currency's been going, really. So people don't realise currencies don't tend to last that long. They change in some format or another. Rightio, let's cruise along. So oil's still a bit of a conundrum. So we're looking at this. We know we've got 5 waves up here. So we're thinking of a little A wave, a B wave, and a C wave for the B wave here, and then a push up higher from this point. So we still need to allow that to play out here. Obviously the trend line's pegging it down at this point. It's possible to have wave 4 in here, but we'll need to gather more evidence for that. But otherwise we need to consider it over here, and all of this just the B wave here. We want a decent size correction for an intermediate wave 4 of this degree of structure as well. So the takeaway here is that we know that this is not a bear market. This is a bullish correction because it's in 3 waves in the first instance here. So we know it's just a pullback in a bull market. But with wave 4s, there's 12 different patterns. It can get a bit complicated. So sometimes it's good just not to get too involved and go trade something else and just chill out for this point. But I track this on the video because it will affect the BHPs of the world to a point. Obviously, they want to get rid of their 10% to Woodside, so that's another story. Copper is going okay, so I won't go into the bigger picture here, but we know that we're talking about a low being in place here, so I could actually just pop that in there as wave 4 low. And we've got wave 1 to the upside. What I'm a little bit unsure about is that do we have wave 2 to this point, or do we have wave 2 pulling back down to the 50-60% mark? We know that, you know, we could look at this impulsively, but it's not clear enough. It could still be a B wave to the upside, so an A wave, a B wave to here, and then pull back down here. So my plan is that if 9,500 becomes the support, then we're going to have wave 2 in over here. And then we'll start looking at this as an impulsive structure, which needs a little bit of attention to do that. So it could certainly just roll over from here. So we do need to be mindful of that, okay? So we're not there yet, but we know that we're bullish because we've got this nice 5-wave structure here. So it's just a matter of, do we go up from here or do we pull back? So we're going to use the 9.5 as the line in the sand, and it's just we need a bit of time to sort that. So the Australian dollar, just have a quick look at that. So from on the 4-hour chart here, from the low here, we're looking at wave 1 and 2 and 1 and 2 and 1 and 2 here, and then from 2 to 3 here we're looking at this as 1, 2, 3, 4 and 5 for the third wave. So at 75 we're going to see, you know, a correction at that point. So if you wanted to purchase, then here or here would be the way to do that. But the main thing here is that it is pushing up. This area here is going to be interesting because this is the 61.8% 50 and the 61.8% retracement level. So we're likely to stall in here for a while. So if we look at, we'll just drag this back here. So we'll probably end up with this situation here. So spending some time in here until we can get the accumulation process large enough to push through as a distribution process. So yeah, 1s and 2s in here, 3s and 4s 50-60% to pin it here. So you're going to need patience to get to the other side of that pond. Okay, over to the stocks. So let's start with the ADR US BHP. So I still think that we've got this here as the A wave, the B wave and the C wave here. Looking down here as wave 1 and 2 and 3 and 4 and 5. I think we've still got to come down and make a new low here for this. Where that's going to occur, I need to pull that apart. I haven't really been bothered with it. If I'm wrong, well then I would take that as the 65 here becoming the support at that point. So I need a classic trading levels pattern on the 65, not just poking its head up there. You know, that to me is not support. Okay, so we would need a classic trading levels pattern to sit on that there, and then we would go long from that point. Then we would have to say to ourselves, well, this 3 and 4 is wrapped up in these gaps here somewhere, you know, and that's the situation. But I'm not prepared to go there just yet because I don't have enough evidence for that. And this wave 4 can sit here. This could actually be down for 1 here, back for 2 and down and pulling down here further. So there's variations that can happen here. So we're not really bothered at this stage. The flat line here is the 38.2% retracement level. And we can look at the Australian BHP, and it's got a nice 5-wave structure down there, hasn't it? From the top of wave B here as 1 and 2 and 3 and 4 and 5. I don't think this is finished. I still think that's a little way, another from wave 4 to wave 5 there'll be 5 waves in here. So I still think that we've got more to go here at this point as well. But this could create a nice buying opportunity down here but otherwise wait for the setup. The setup could be a tested support on 43 on the top of minor group 1 at that point, unless we get lucky and it comes down to 38, 39 and then climbs back up and finds support on 40. Then we could work it from that point, you know. So we'll just see how that plays out here. We won't know until we get there, but we're in the later stages of that. And also been looking at Fortescue. So okay, so that's dropped. That's good. Just clear this up here. So we're looking for one more move to come down. I might have to bring that down a bit further. So in that case, I'll just get rid of these because we were looking for our 4th wave there. And in this case here, just looking at, we'll go and have a look on the intraday or the 1 hour, whatever we're looking at it in, but we'll be looking for something like this here. So some sort of 5th wave here. So there may be wave 1 and 2 in here, I'm thinking. So we're still in free fall here at the moment. Closed low on higher volume, so that momentum's still to the downside at that point. We'll go to the tick chart. I just can't remember what we've had here for this. This looks okay at this point. Okay, so from wave B up there, we're counting 5 waves down in blue of 1 and 2 and 1 and 2 and 3 and 4 and 5. I should really double check that kind of just to make sure, but the wave 4 really sums it up. If I just take that from there to there, where does that leave us? Oh, it's close enough, like the 38.2, and not way out of whack. So what I'm doing that for, it tells me that this green wave, for these green 5 waves, impulse wave, is probably right. But now we can start honing this down. So we're looking for 5 waves here now to make that low. So a bit of work to do here. I'm not sure where that top is. It could be there or there. We need to bring that down here. We'll just get that out the way for a moment until we can get our bearings with this. Obviously I can't count that, but if I counted, is that, which is the high there, that's something that we could do. Let's just check on that. I mean, that just looks like it's up in 3 waves here. I'll have to check. I'll check my own charting program. But that there makes a nice sort of little impulse wave, but that looks like 5 waves up there as well, so that's a contender. That looks like 3 waves here. So I need to do more work. That's definitely the A, the B. Probably could be this one, you know, an A, B and C, yeah. So it's probably this one. And that's kind of interesting because that would leave, and I'm really just guessing here, you know, but you got to make a stand at some point. We can adjust this. I'm okay with being wrong. But that would just be that wave 3, and then we'll need this wave 4. We'll just see how it goes anyway. It's okay to have a bit of fun. $16.50 here's a medium level. We know the 18 is important, so they're the main levels within this space. Obviously, there's other stuff there as well. You know, the next one down, we won't get into that right now, but that's enough for that. I didn't look at the US dollar index, did I? So we need to do that. Let me just bring it up on this program. DXY. Okay, so we've got the B wave, the C wave, and we're moving down here for this. And we need to go in a bit closer. I think I just might go to the 15-minute chart just to cut a long story short. I mean, if you've been following this, it won't be difficult to follow this then. So anyway, the top up here with green wave 1 and 2, which will probably have to change for the next degree higher. Then we look down here as wave 1 here and 2 here. And then we count it down as 1, 2, 3, 4, 5, those little blue dudes as wave 3. And then we're looking for wave 4 to move back. So we don't need that. So that wave 4 is pulled back to basically our little box. We don't really want to see it going any higher because that means that way would have to count it as more bearish, and that means that if that came much higher, we'd have to take that top here, and I'll just take it to the 92 there, and then what we'd need to do is we would need to look at, this would be the 50-60% at this point, and we'd have to look at that as a wave 2 at that point. That means that this little blue dude here, that would come down here as wave 1, and then this little blue dude would go over there as wave 2. So we'd have a series of wave 1 and 2 and 1 and 2 and 1 and 2. Now that's as far as I could take it at this point. If it got above that, then that would be a problem at that point. We could probably even be bullish at that point. It's difficult to count this down from the top here as 5 waves. I mean, of course we can as 1, 2, 3, 4, 5, but it does leave this one here a bit short, does it? That's the length of that, isn't it? Yeah, it's short because I got this, my yardstick here for that. So that can't be wave 3. So it could only be 1 and 2 and 1 and 2 and 1 and 2 to the downside. We don't need to go there yet, but it's just good to talk about these things. Little blue dude didn't want to go home. He liked his new role over there. So we'll just see how this plays out, and yeah, we'll just see how this goes. But otherwise, we'll be looking for wave 4 down to wave 5 here for this. We knew that there'd be a dance across 92, and sometimes it's nice and easy, and sometimes it's a little bit tricky. We'll just see how it plays out at this point. So yeah, that's where we are at the moment. It probably makes a nice. If I put this wave 5 over, I sort of like to use that one, but still doesn't finish well. I'm just sort of thinking as an A wave here, B wave here, and a C wave up here looks quite nice. Anyway, I'm not going to spend too much time here. Let's just we'll just leave it be for a little while. Yeah, let's just, so this pattern here, if we look at this on the bearish side of things, the simple way to go through would be, if this is the 92 here, to come down, bounce off here, give us our 3 waves, and then move through here and come back and lock under here and then go down. But it may go above this level as well. So this is the classic trading levels pattern, this one, and the other one is a variation. So we could pull back up here to the other wave 4 in that particular case. So if you're shorting, you just be aware of these two things. You just have to be patient and wait. You need that first low below the level and the second one, and if it goes to here and drops, well then you got it here and you got it here. But if it goes back above the level, then you have to wait for it to come back down again, you know. So really this little pattern in here that I got here, you could, if you drilled into that, you would see this larger pattern in here, all of that larger pattern all tied up and bundled up in there at a smaller degree, a smaller fractal, if you will. Alrighty, that's that. Thanks for tuning in. Cheers.